welcome all of you, alumni, co-alumni from REC Trichy and NIT Trichy as it's called now. We are conducting a series of events this year in the Diamond Jubilee year of our college in the run-up to the Global Alumni Meet that is planned for 4th of January 2025 at ITC Grand Chola, Chennai. So, as discussed earlier, we are trying to do a series of events, and we thought that all of us or most of us are from an engineering background and would like to understand and try to see what all the budget had in store for us. That was the genesis of this event. We have with us our 1996 batch, Mr. Arunagiri. All of you will be familiar. He is a successful founder, CEO, entrepreneur, and CIO of an investment firm called Trustline Holdings. They run a successful AF and PMS boutique, managing about $200 million plus, and returned about 18% plus CAGR for about 17 years. A wonderful performance, and he is specializing in a value-based approach to investing, which we'll talk about a little later. Welcome, Arunagiri. Thanks for accepting to be there. I welcome Arunagiri, the market expert, to kind of throw some light, share his perspectives and views on what the budget has done for capital markets and what is looking exciting to him once he opens his desk tomorrow. Now, what's he going to do in the markets? Yeah, over to you.
Hi. Thanks, KK. Thanks for having me here. Appreciate it. From the capital market perspective, I think I would say the budget is kind of a mixed bag. I will tell you why we feel that. On one side, of course, the macro focus has been there in the budget in terms of macro stability, macro prudence, and fiscal prudence. As Arjun was saying, there's been a lot of temptation after the election setback for the government to, dole out lobby freebies to the mass, especially after the election setbacks. That's not been the case. I think there's been complete, focus on the macro stability, fiscal, and macro prudence. That is a bit of a positive. And to understand this, all that one has to look at is to look at the quality of expenditure. I think this government has been has a lot of focus in terms of where they spend their money. And in that, I will just give you one example. Of course, Arjun has talked so much about macro, so I wouldn't like to, add too much into this, but I'll share a few points and then move on to some of the negatives from the budget, which is negative for the markets. So the data point I wanted to share is go back and look at the RBI bounty which they got from RBI in terms of special dividend, right? 2 trillion rupees. In terms of incremental number from FY interim budget estimates, it's about 1.3 trillion or 1.4 trillion. Where did this money go? Did this money go for funding freebies, or did it go into productive channel? Now, if you look at the, if you go back and understand, analyze what this money has gone, this extra bounty from RBI, 50% of it has gone into funding, reducing the fiscal deficit, nearly 50%. And chunk of the money, the balance, has gone into productive allocation, which is, almost 70% hike in terms of the affordable housing scheme, which has moved up to almost about 70,000 crore. It has increased by about 30,000 crore. So this government's focus in terms of quality of expenditure is highly commended. That is one. And second thing is about the conservativeness, which Arjun talked about. Again, in terms of estimates, be it your tax collection projection, be it your fiscal deficit number, borrowing number, or nominal GDP growth number, all of them, in our view, is underestimated. Which means I think it is very likely that they might end up with a fiscal number which might be much better than what they are currently projecting. And another interesting feature of this budget is the directionally they have stuck to the track or the trend which they have set for themselves in the last 3-4 years. So one of the key trend which we closely monitored and which we're very happy about the budget trend in the last 3-4 years is how they have channelized by reducing the leakages in the subsidy and into the capex kind of capital allocation. So if we go back and look at these numbers, right? 2-3 years back, you used to spend about 2.3, 2.4% on the subsidy in terms of percentage of GDP. And capex allocation in terms of percentage of GDP used to be around 1.3, 1.4%. That number is now almost reversed, and the capital allocation has gone up to about 3.4% in the interim, and that almost they've kept it same at 3.4% in the current budget FY25 estimates as well. This is a key, in terms of directionally, it's extremely positive in terms of reducing the leakage from the subsidy kind of allocation, which is wasteful expenditure, and into capital allocation. So that is a key trend. These are the positives. That's one part of the story. But the negative surprise, of course, all of us know that the biggest negative surprise is on the capital gains tax. LTCG has been hiked to 12.5%, and STCG has gone up all the way to 20% for listed equities, right? LTCG, one can understand the rationale. They have actually rationalized the entire LTCG tax for the entire spectrum, both listed as well as unlisted. There one can understand the objective. Since it has been rationalized for the entire spectrum, one might probably hope that this is going to stop with 12.5%. It may not move beyond 12.5% because it's been rationalized well. But the real worry for markets is on the STCG. It looks more like an interim step because the reason is it's not yet fully rationalized. You have listed space at 20% and unlisted at slab rates. And government has repeatedly hinted that at some point they would like to rationalize towards the slab rates. More and more, in our view, it is likely to move up over a period of time towards the slab rate. That's a real risk for the market. Given the current bullish momentum market has taken, the current increase in its strides, and it keeps moving. Even today, the markets have done really well in terms of broader markets. But in our view, I think at some point the market will start pricing this risk, maybe closer to the next budget or at some point. We really don't know at what point of time the market will start pricing this risk. But I think ST's short-term capital gains tax is more of an interim measure now, and it is likely to it's headed up towards closer to slab rates. That's a real worry, and one has to really watch out for. That's what I would summarize. I think you have a lot of positive things on the macro front, but the real negative surprise is on the capital gains tax for the markets. That's what I would say, KK.
Yeah, thanks, Aruna. So I was just mentioning that there are many themes and priorities government outlined. So what is one big theme that you take away from an investment perspective from the budget? What do you like from the budget as a big theme for the next 5 years? That's one. And the second question was, what is the big miss according to you in the budget? What she could have done and she didn't do?
Yes, KK. Actually, in terms of big theme, I wish some big theme had been there in this budget, but unfortunately or fortunately, I think this regime believes in continuity in terms of policy. I'm not sure there is anything big or big ticket kind of announcements, but I think what they have been doing consistently well. And in terms of infra, in terms of renewable energy, in terms of battery management and other focus areas which they had listed out in terms of 9 priorities, I think they are good. And in terms of infra, what I would, what I'd seen from the data is that not too much of a growth in terms of allocation, in terms of hike in allocation numbers for your railways and some of the core infra, in terms of road and railways and other sectors. But I think the biggest hike has come in your affordable housing scheme. And that is very good for in terms of multiplier effect for the economy. As all of us know, I think the more money goes into housing and building and construction, I think there's a lot of multiplier effect for GDP. And in that perspective, I think this government has done a good decision. It is also, of course, politically positive for them. And instead of throwing money and freebies to the, in terms of welfare schemes, they have in terms of decided to allocate into more productive and more areas where there could be more multiplier impact. So that way we like that particular allocation. So you will have sectors which will benefit out of the increased allocation for affordable housing. But in terms of miss, FM talked so much about the next generation reforms, right? And she talked about all the capital factors which are going into production, in terms of labor, land, and capital and technology. She wants to do a lot of things, but I would have loved to see some real concrete action in that particular aspect in this budget. Though they are now saying that they're going to make the blueprint and probably they're going to set the direction for next 4-5 years. But what is a big miss is at least 1 or 2 items in that next generation reforms. I think that would have been really positive for the markets.
Sure. Great. And just one point here, we bring in Arunagiri. Arunagiri is one of the mentors and advisors in campus angel networks. He's also got another face to him where he's kind of guiding angel networks, etc. So I think in the budget, there was a removal of angel tax. I think, and there's a question on that. How will, but the question is different. I think Logesh is asking us about whether the long-term capital gains, tax will impact angel investors.
Yes, actually, if you look at the recent rationalization on the LTCG, both listed as well as unlisted, all of them have been now, taxed at 12.5. Earlier, unlisted companies, if you make a profit, long-term gains, it was at 20% with the index. That was the case earlier. Now, I think it has been rationalized. So it is in a way positive move for unlisted stocks, which includes, my own stock in my company, or it could be angel, stocks in angel investing or private equity. Any of those categories now will qualify for 12.5 for long term. And even the period has been rationalized. So, which is a very positive move.
Yeah. So, we've heard people talking about reduction in interest rates. Probably the bond funds could do well. Equities are at a very markets are at a new high nearly, and valuations are so expensive. So, what would you advise our friends here? You have a value-based style of investing. So, how do you think you can add value to us? Last 2 minutes. I think
for value investors, these are the most challenging times. Stock prices, it's very, very difficult to identify undervalued stories, undervalued stocks, undervalued companies. The moment some companies are seen to be undervalued, within a couple of days, they just get jacked up. So it's a very challenging time for value investing. Most of the sectors, most of the stocks are very expensive. They are trading at a multiple which are very high in terms of relative terms, historically relative terms. But at the same time, having said that, the medium-term prospects and long-term prospects for growth story for India is so strong. And that's one of the reasons all these stocks are quoting at such multiples. Because there's so much of flows, both from domestic as well as FIs. There is absolutely liquidity is so high. So very, very difficult to wait for a window where you would see a sharp correction in the market. One can't say that. So all that one can do is look at stock specific bottom up kind of an approach where, whenever there is a wobble or consolidation in the market, and whenever it comes, instead of waiting for a very sharp downturn in the market, and keep accumulating, building position for a longer term story in India. So it's a difficult task, but a phased, prudent approach in terms of stock specific bottom up approach. Identify relatively undervalued positions. You will not get very deeply undervalued stocks in this market. It's ruled out, and not even a single you would get. But relatively undervalued positions which are going through some kind of headwinds for the particular sector and which are ignored by the market participants because of soft earning patch in the short term. Those kind of positions one can still build in a very phased manner using some sort of wobble which comes once in a way in the market. It's not a linear market, right? Even a bull market, a structural bull market gives you that kind of a pause. We saw it in the month of May before the election. market took a pause and it was, consolidating in a range bound move. And in the month of June, post-election, we saw a very sharp dip. So those kind of wobble keeps coming, and one must utilize that and keep building, because the medium and longer term story is looking so strong for India because of the macro stability which we talked about, which Arjun talked about, because of this regime's focus in terms of macro stability.
Great. Thank you, and see you soon again on another event shortly. Thank you all.
Thank you.
Thank you, KK. Thank you, RECAL team.
Thank you. Bye.
Thanks a lot,
Thank
everyone.
you. Good night.
Thank you all.
For more videos, subscribe to our YouTube channel for our regular updates and follow us on other social medias.